The world loves its coffee, and that's good news for CCL Products. The instant coffee maker posted healthy numbers in the first quarter, but will this trend continue? Let's pose this question to Challa Srishant. He's Managing Director of CCL Products. They came out with a fairly strong quarter one as well, when revenues went up 20%. EBITDA margins expanded meaningfully, I must say, and the profit almost a 50% uptick. As I said, Challa Srishant with us. Good having you, Srishant. Thanks so much for taking the time out. I remember a conversation that we had maybe a couple of months ago or 3 months ago, wherein we were talking about how the capacity expansion plans in place would help you, because coffee prices certainly don't have a direct bearing on your numbers. Tell us how the quarter was, what are the highlights according to you, and how does this set you up for the rest of the year?
Yeah, this quarter we managed to achieve a 46% growth on the bottom line and a 20% growth on the top line. What we have done is, normally quarter one is a lean quarter for us, so we have utilized our additional spare capacity in this quarter for achieving the targets that we have set this year. So this year we have projected a 10 to 20% growth compared to last year, and we are right now on track for achieving the same target.
Interesting. What is the reason why your EBITDA margins have expanded so meaningfully? If prices are not a direct bearing on margins, surely there has to be something else which leads to a 300 basis points expansion in a quarter.
Hello?
Yeah, Srishant, can you hear me?
Yeah, sorry, there was a cross connect.
Okay, I was asking you about the margin profile. I mean, what's led to this? Because if prices don't have a direct bearing, surely there is something that has worked for a 300 basis point expansion in margins.
Yeah, so what we are currently doing is we are producing more than 1,000 different products, and we have customers who may ask for certain premium products to be executed in one particular quarter. So the right way of looking at the company is, again, on an annual basis and not on a quarterly basis. This is something which I've also mentioned in the past. Going into the future also, we are expecting to execute a mix of both types of orders, more profitable as well as less profitable ones. Overall, towards the end of the year, we are expecting an average improvement of that 10 to 20%.
No, so sorry, your Q1 EBITDA margins were at about 21.5. Am I
Yes.
Am I to believe that your average margins for FY19 would be significantly lower than this or slightly lower than this?
No, it will be in the same range.
20.5.
Yeah.
So which means the average margins for FY19 would be higher than what the average margins for FY18 were, for sure.
Yeah, last year it was around 20.5, so it will be a little higher than what it was last year.
And this would happen despite the fact that the acquisition of newer customers, a couple of reports are stating that your new strategy, volume growth, acquisition of new customers could all put pressure on margins. You are saying that that strategy would continue, but at the same time, you will still be able to expand your margins as well in FY19.
Yes. Last year, we implemented the strategy of going after volume customers, and this year also we are doing that. But this year we are also focusing more on premium products, including freeze-dried coffees. So this is one of the reasons why, compared to last year, there will be an improvement from what we've seen.
So, I also heard you being cautiously optimistic on your volumes. Now, this is despite your freeze-dried capacity, which I reckon will get commissioned in September 2018, as per probably a release that you've given. So, organic plus a new capacity coming in, leading to some more growth, you still believe you will be in this 15% range?
What we have mentioned with respect to the new plant is that the equipment installation will be done in September. We're going to do a trial production in Q3 of this financial year. And after the trial production, because this is a greenfield project, it may take some time to stabilize. After that, we have to get the necessary approvals from customers. Realistically, it looks like we will start commercial production only from next financial year. If things pan out differently, we might start earlier. So what I was mentioning is that if the plant gets commissioned earlier, then we might have to revise our guidance upward. Otherwise, we are sticking to the same 10 to 20% guidance.
Is this 10 to
20%.
Okay, and there is a very high probability that FY20 would see the material benefits of this new commissioning of the capacity coming in.
Yes, it will.
Okay, interesting. Just one final word, really. I believe your Switzerland plant is facing some issues due to some regulatory hurdles that might have cropped up. What's the status there? What's the impact there on numbers in FY19, if at all, and how do you plan to resolve this?
So this issue was there for the last 6 or 7 years because any products that we bring into Switzerland and re-export into the EU market, there was an additional 5.9% duty that we had to pay. We appointed a Swiss director last year, so he's been negotiating with the government, and they seem to have found a solution now where they make the factory as a bonded warehouse, and now we will be able to be more competitive in the EU market. So that implementation will start in this year.
Okay, so you will see tangible impact of that happening this year, I presume, right? If I'm understanding you correctly?
Yes.
Okay. We wish you all the best for that.
Yes.
Challa Srishant, thanks so much for joining us and giving us this perspective. And we do hope that you have to revise your guidance upwards. That would only mean that the plant gets commissioned earlier than what you believe as of now. All the best for that.